Good evening. Ira Epstein with your Spider ETF wrap-up, and this wrap-up is for Thursday, the 28th of April, 2022. What a crazy day, and it's wild. So while you see Amazon is up at the settlement after market came out, after the close, their earnings came out, this market fell 10%. It missed on every single cylinder, whereas the opposite was earlier, before the close, that Apple picked the whole market up because it worked on every cylinder. You can see the confusion going on between Tesla and Twitter. Twitter getting a bid, Tesla down. Each day, is Trump actually going to go, is Musk going to go through with doing the deal or not? I don't know where Trump came up in my mind. I'm not even thinking of him. That's the funniest part. But down there, up there, Disney up a little bit. You know, at some point here, Disney's going to be interesting to look at. It's got to get through this fight in Florida. It's not good for the company. You can see the other markets, they're just all over the board. So let's go to the chart. Now, the Invesco actively managed, exchange traded, it's such a long name, Commodity Fund Trust daily bar chart. Before I get any further, I want to bring something up to you, the Linn research. If you're going to watch this, you want to know what the commodity markets are doing. We're commodity brokers. We write on this, and we have a whole team that writes all day long. We probably publish 50, 60 stories a day on the cash markets, the trade strategies on the spreads, what the fundamentals are doing, where the tightness is, how do you play all that? This fits right in with this. So if you're looking to get information, just take your cursor, move it right up here during the video at any time. You'll see the icon pop. Fill out the form. We'll get you the free information. Choose what you'd like, okay? So when we look at this, you can see that you've had a correction. Now the market's about halfway into that. When you look at the chart, the swing line is down. You got lower highs, lower lows. And where's the market in moving averages? The correction came into them, held, it's still over it. So you have the bias up, but you have the trend down because you have lower highs, lower lows. The market needs a better pattern to tell us what to do. When you look at the Bollinger Bands, they're fairly far away on the upper and lower side. The upper ones have been getting hit, not the lower ones. So that should tell you this market has a strong upside bias. That changes the first time you hit the lower band. Haven't done that in months. When you look at the momentum of the market, you had been in a correction momentum, and you're sort of stalling out on that right now. AMC still fishing, as I call it, for a bottom down here. Now, the pattern is this. If the red line closes over 21, I think you have your first indication of a potential spring-summer bottom in AMC. That's not a buy signal. That could be a bottom in this market. It's back into these old lows, and that is where the market is trying to hold. As a company, I think they have very serious issues, but I also realize the blockbuster movies are coming, and they're going to see better numbers during the summer, and then they'll tail off, in my opinion, into misery again. In Apple, well, Apple did its job. It held, looking at it now, the 200-day average and the Bollinger Band. Yes, you slipped under it, but you didn't go anywhere. Now, here's what's even more important. Did the market embed? Let me step over here so we look at this together. You're looking for numbers where both not under 20. Day 1, so that was last Friday. Day 2, day 3. This is embedded. It takes several days to do it. When you lose the reading, this is as of Tuesday. You were still embedded yesterday. When you lose the reading, it happens with a close over 21 in the slow stochastic. That's a sign for the pros to come out. The stochastic often turns before price makes its bigger move. So you got the combination today, no question about that. I'm looking for a challenge in those numbers right now. I'm wrong. If tomorrow, only tomorrow, if the red line closes back under 20. Disney has been riding this band, but until you lose this embedded reading the way you did just now in Apple, I think the pros are waiting to sell the rallies here. As I said, too big of a problem. They've got to solve this Florida situation. I'm sure behind the scenes there's a lot of talking going on. When you take a look at XLF, what did you just do? So we take a look. First day of embedding right here. Not there. Tuesday, Wednesday, Thursday. You're embedded. Tells me that the first pop in the market here, the pros tomorrow morning will look to see if the market gets much of a rally. They'll hit it. And if it does and you get a close over 21, I think they'll bail on the close. Prior to that, they'll look to see what happens. You did have an outside day up. That tells me the market's trying to form a trading bottom unless that low is taken out either tomorrow or on Monday. Barring that, I can see the reason for a bit of a bounce here. Doesn't mean it's not a short sale. The same thing in XLI, but it's not embedded. You have a big outside day up. You might want to get more going here. You got to 98.11. You took out that high. So you don't have a trend anymore. You have a market that went to the Bollinger Band, fought a battle. Looks like it wants to give you a bounce, but it's not so far anything more than that. In the semiconductors, a big sign to be out of shorts. You got a settlement that's at 24.60. Unless you close back under 20 tomorrow, game over. I think you're going back to the 18-day average. I think the smart money got out today. In the home builders, suddenly you turned bullish. Higher lows. You look at 63.37. You got a higher high today at 63.45. You're opening up the door for the upper Bollinger Band. Not a dramatic move from here. That is $1.07, but that's about all that I'm seeing at this point in time. A lot of sideways action, though. I think you'd agree with me on that. In the energy sector, you have a market that's approaching the first resistance. So we've had the bias down since the market is staying under the 18-day average. The trend is up with the bias down. You need to close over 77.63 to open the door to get to higher levels. That's how I'm viewing the chart. In the gold market, I have been looking, especially in the futures, not so much here, for a trading bottom to come into play. Take a look at my futures video on the metals if you want to on YouTube here. But you'll see what I'm saying. Now, the key here is to get over 78.30. You're very oversold, not trying to embed, fighting now for 4 sessions at the lower Bollinger Band. So far, not even a signal for the pros that they have to be worried. Get over 78.30, that might do the job. GDX, a little different story. You're very close to the 100-day average and this number with an outside day up. I think some of the smart money probably said in this market, goodbye. Had my run. I'm out of here. Copper, same thing. I think that you're seeing that the market's holding against the Bollinger Band and the 200-day average. Obviously, and this is what I want to show, you got under like it didn't exist. The red line, the 100-day average, went right to the 200, and the market stopped breaking, started fighting. So that means to me that the 100-day average should be the resistance on the way back up. And today you tell me what the market did. It's knocking on that door. Now, if it can close over that, you open up between here and the 18-day average a possibility of a bounce. In TLT, it's going to be very hard to want to do anything. You lost the embedded reading back over here. You never got it back. That often means a run to the 18-day average is in the cards. You can see what the market's trying to do. I don't know if it'll get there or not, but I don't think you're going to get a lot of people that want to get in a big-time position one way or the other in front of the FOMC meeting next week. UUP, look at the strength in the dollar. Unbelievable. These were the buy zones, and if you're a subscriber of me, what was I preaching during the subscription period? In other words, in the morning subscriber videos, not the ones you see here for free. You've got to be jumping up and down here. In the euro is just in a downtrend, but too far under the Bollinger Band to want to get short. This was a head fake market. Now let me show you. You lose the embedded reading. Do you see here the reading at 21? The only time you can get it back, and I teach you this in my course, is the very next day if you close back under 20. You did it. Now you got to be short again on that close, and saying, hey, if you don't pick up, you're probably going down. Pick up again and re-embed. It didn't, and away you go. In other words, lose the embedded reading is what I'm trying to say, and it's paid off in spades. Head fakes occur, not a lot, but they do occur. You've got to pay attention to them. Remember, if you want to get the Linn research, I can't make it any easier to go with all this. Just click up here with your cursor, take advantage, and we have many other offers there. You might want to take a look at them. I'm Ira. You have a good week.